Hi, good morning. I'm Scott Forcino, an associate broker with eXp Realty out of New York City in the metro area. I'm very happy to have with me a friend, Vincent DiMella, a senior loan officer, local guy that did great. And he's been a mortgage professional for a lot of years. We want to hear about him and his business and how he helps clients and works with his referral partners. Good morning, Vincent.
Good morning, Scott. How are you?
Doing great. We're still a little taste of winter here. I'm dying for it to get out of here. A little snow and, in the Northeast, we're battling weather still. It's annoying. Get me out of here. So tell me about you and your company and your experience, please.
Sure. And thanks for the invite today, Scott. Morning, everyone. Vincent DiMella. I'm a senior loan officer with American Financial Network. I have over 25 years of home lending experience. Closed over $1 billion in financing throughout my career, something I'm very proud of, and helped over 1,000 families, first-time homebuyer families, achieve the dream of home ownership. So really proud about that. I'm a lifelong Westchester County, New York resident and a taxpayer, property taxpayer, married with 2 daughters, and we live in northern Westchester, and 2 great kids, great students, and great track stars, future track stars, hopefully so. A little bit about American Financial Network. I'll touch on, we're licensed in all 50 states, which is one of many reasons why I came over here. I help finance residential, people that are purchasing a residential property anywhere in the United States, all 50 states, or commercial property. Another reason why I came on board is the extensive breadth of different programs that we have for residential purchases, as well as commercial purchases. So something I'm very excited about and having a lot of success with here at American Financial Network. Corporate offices are out in California, but I have local offices here in Westchester County and White Plains, in Newburgh and Orange County, and Long Island, New York, and soon to be Florida. So
okay, well, tell me about these rate movements and fluctuations. It's kind of like gas prices. Tell me where we're going.
Unbelievable. I just saw a joke this morning. I want to tell a quick joke. Somebody tried listing their car for sale on Kelley Blue Book, and the question that came back to them was, does it come with a full tank of gas or not?
Oh boy.
But anyway, so we had some really crazy market fluctuations. I'm giving my market commentary every week on long-term interest rates, but really it's happening with regards to inflation and what we're seeing, energy inflation, and the prices that we're seeing at the pump. So we saw, over 2 or 3 weeks ago, we were seeing around $3.50. Now we're well above $4.50 up here in New York. California's already hit the $6 threshold, soon to be $7. And if you just look at the history of every recession in the United States, they're always predicated by an energy crisis. And before our time, Scott, in the late 70s, we saw it, what was happening with the oil crisis and the gas crisis. Our parents waited in line for gas in the late 70s, early 80s. We saw the energy crisis, in the later Bush, early Obama years. There was an energy crisis. There was also a mortgage crisis, but there was a large energy crisis around that time. And right now, we're seeing the worst energy crisis I've seen in my lifetime, and it's going to get a little bit worse before it gets better. However, it's putting pressure on markets, and we're seeing wild market fluctuations. And a lot of the times there's an inverse relationship between the Dow Jones, the stock market, and the bond market. Bond market's typically a safe haven for money to invest in. So when there's volatility in stocks, usually a lot of money goes into the bond market, specifically the 10-year treasury. And when the yield goes down on that, interest rates go down. So we saw a wild fluctuation in rates last week, topping off at 4.75, all the way down to 4% even. And it spiked twice throughout the week. So it was a crazy week for mortgage rates. They're starting to settle down in the low 4s right now. And that's for a 30-year fixed interest rate mortgage. You could probably get it in the 3% range if you take out a 15-year fixed mortgage.
Well, let me ask you this. I mean, I'm sure you get this question all the time. How do you lock a rate, especially in New York, where there's lawyers with contracts and things take time? How do you lock in a rate? How does a client benefit from locking, if that's possible?
Great question. What we like to do here is we like to have everything in line before we lock in an interest rate for a borrower. Now, when a borrower locks in an interest rate, that's the bank's promise to deliver that price to the borrower at the closing table. The bank also is promising the investor this loan within a certain period of time. So there's a couple promises being made in the interim. But just to make a long explanation short, we like to make sure that we have the appraisal done and completed and approved in conjunction with the contracts. Why? Because if the appraisal comes in low, a lot of the times that affects the price of the mortgage. Okay. And sometimes we have to go back to the borrower and say, you know what, this $900,000 house you're buying, it's really 800,000. The amount you're borrowing is exceeding a certain threshold in pricing. So we cannot deliver the interest rate we promised you. So to answer your question, we try to lock them in for 30 days because by the time we get the appraisal, we have very fast turnaround time from the appraisal being approved till actually closing the loan.
And I know there's been to use your term, a crisis with appraisals. They're so jammed, and you can't really. That's something outside the banks and the lawyers and the realtors' control. You're dealing with an independent third party.
Yes, we have to because of the Dodd-Frank Act that was put in place in 2008. And in my personal opinion, the mortgage crisis didn't occur because of appraisals or anything of that nature. It really had to do with ATR, the ability to repay. A lot of the loans were liar loans, for lack of a better term, where customers did not have to prove their income that they could afford this $500,000 mortgage. So just to get back to the appraisal situation that we have going on right now, yes, there are a lot of buyers. Yes, there are very few appraisals, few and far between. Yes, COVID put a little bit of pressure on it, but now we have a go-between between the loan officer, the processor, and then we have the appraisal management team. That's a separate entity in and of itself. That takes a couple of days before the actual order gets processed from the loan officer to the actual appraiser. So it does take a little bit more time. Why is the appraisal management team in place? They're trying to alleviate any potential for fraud, for fraudulent appraisal values. But yeah, it is taking a little bit more time. There is a lot of pressure. We did see a lot of appraisals coming in a little bit low last quarter because it took some time for the actual market to catch up with the appraisals, if you know what I mean. We needed some closed sales in order to justify the appraised values. And a lot of the appraisers are good and they do a good job, but I'm starting to see them come in for value the first quarter of this year. We're starting to see a little bit of a leveling of the values.
I see. So tell me, I know there's multiple offer situations in your market and above asking. How do you navigate that? One, with the client who may have of course, they need a place to live. And two, with the realtor's expectations working with your agent referral partners. How do you manage those? That sounds like a challenge.
Great question. It is a challenge. And, every transaction has its own economics. Every loan has its own economics, right? So if you're looking at a $500,000 house and the borrower is putting down $250,000, they're putting a 50% down payment and they need to go up in value. And they come to me and they say, what do you think? I say, listen, it all depends on how badly do you want this house. The realtor believes it's worth $500,000. I think it's worth about $500,000. If you need to get your offer up to $530,000 to get the house, guess what? Yes, you spent a little bit more money. The loan amount will not change. The terms of the loan will not change because of the amount of money you're putting down. You're putting down so much money, the bank feels comfortable delivering the same price to you. And guess what? Next year, that house is worth $570,000. By the way, the prices are appreciating. So there's a couple ways you can deliver this to a customer. If you have a customer that's buying $600,000 two-family with an FHA mortgage and they're putting down 3.5%, that conversation is going to be a little bit different. Whereas it could actually affect them getting approved for the loan, and it could blow the transaction up entirely where they will not get approved, the transaction will not close. So again, each transaction is different. It has its own economics, and each of them have a different explanation.
Well, that makes sense as far as mathematics is concerned. But working with agents, I know that that's usually the referral source of choice between lenders. I'm a former attorney and agent now, and the agents are the first one to deal with the buyers. Let me ask you this: by the time you get involved, they've gotten their offer accepted. But in the cases where they're putting their ducks in a row, which I think is a better approach, getting their loan set before, how do you help someone who's doing less than the 10 or even 20% down get their offer accepted? That to me seems an art, to assist the buyer and the agent to get their offer accepted.
I have a good reputation in this market. So specifically, Westchester County, Connecticut, Hudson Valley is where I do a majority of my business every year. And all I do is, I'll reach out to the buyer's agent, share with them where we're at. And if the buyer's agent feels uncomfortable or is questioning some things, I offer to even call the listing agent. I say, listen, let me call the listing agent. Are they in line for their offer being accepted? Yes, Vincent, but the listing agent's entertaining other offers. I'll even offer to reach out to the listing agent. A lot of the times I actually know the listing agent and we've done business together. And I'll say, listen, we have a borrower. Yes, they're only putting down 10%, but guess what? They have an amazing job. They're going to start to get a bonus following year where they're going to be able to pay down their mortgage. They have an 800 credit score, family people, I'll sell them on the kit and caboodle two times last year. I got my buyer's offer accepted because I reached out to the agent and because I had a relationship with that agent from either currently or years ago and they remembered me. So, and one agent actually called me back and said, Vincent, the reason why I took this offer is because you're on the loan. The other loans, I didn't know the person at mortgage company X. I didn't know the company at bank Y. I know you. I know you're going to close it. And we closed successfully.
And that to me, it really was what separates a professional from another. The way to distinguish themselves. If you weren't a practicing professional in this area, and you were, a buyer was dealing with Quicken Loans or Rocket Mortgage. I mean, number one, those loans are repelled. But number two, there's no one to speak to. There's no trust behind it. And there's no way to have any kind of rapport. And you acted as an advocate, and I commend you for that. That's really the value in working with a local pro. So you and the agent were, to me, a great team, and that buyer, I really hope, understands the value that you brought to that transaction.
Yeah, sometimes they do, sometimes they don't, but that's fine. It's all part of working with myself and the team. We, anything and everything it takes to go above and beyond to secure the transaction, to secure, like you said, the major hurdle at this conversation is getting the offer accepted. You have houses, 10, 20 offers the following Monday after a Sunday open house. It's really, really brutal out there for buyers. So what's the competitive advantage? All right, cash offers. Well, we don't have a cash offer on this house in Yonkers. We have 20 offers. They all have mortgages on them, and we need to pick one. So, that's where I come in handy. And a lot of the agents that do work with me do appreciate that. And it's all about getting buyers in houses. Yeah.
There's another point which, I'll try to make delicately. Not all agents have your experience. So if someone is relatively new and they are in this boom economy, they may not know the nuance of handling a buyer getting that deal, where they may have something to sell. They have been rejected a bunch of times on homes of their dreams. I mean, I think some of the gray beard might help you assist.
And the missing hair too. I used to have hair.
Well, we're all fighting that, but the gray beard would show that you've been around, and been through different markets and able to navigate.
Yeah. Thanks for bringing that up. You just jarred another memory. Closed on a co-op loan in Scarsdale, Garth Road. So,
right there,
we're speaking the same terminology, but for everybody else out there, there's this certain type of property that we have in New York, and very few other states have it. It's called a cooperative, where you own shares of stock in a corporation. Anyway, long story short, it's an apartment purchase for like $150,000, small loan, considering the loan amounts up here. But it was an agent I never heard of before. I did a little bit of research in Scarsdale, and then he called me on the phone. I'm like, all right, so you're a new agent. Let's just agree on that. Yes, I'm a new agent. Okay, so we got the ball rolling. I think we signed contracts in August. We didn't close until December. I spoke to this agent every week, probably twice a week. I said, listen, I have 25 years experience. You're a new agent. Just, hear me out on these things. I'll work with you. You work with me. We're going to get this closed the best way we can, and again, like we had a board meeting that was set for October. So again, co-ops, you need a board approval before you can actually close on it. Well, the board approval was extended until December without any rhyme or reason. Well, what's that? That's an extra 60 days of a lock-in period that I have to, so again, without getting into too much detail, I had to do a lot of finessing. I had to do a lot of reworking of the loan to make sure that this customer's price was protected, because if it wasn't, the rates going up would have declined them upon board meeting. So there's a lot of moving parts involved, and I still don't think the realtor got it yet, but he's a young guy. He's very inquisitive. I think he will after a few more transactions down the road, but helping new agents is my specialty. I love helping agents.
Well, of course, they just, I mean, no disrespect to anyone in the field, they just expect you to get the money, and you expect them to get the offer accepted or to find the right buyer. If they're the listing agent, everyone is really just expected to their job, whether you play first base and they play third base. But I consider myself really proficient in the real estate business networking aspect of this, locally and across the states. Where people really bring value. And I had a problem and think that PlugIntro really solves the problem. I did not have enough people to speak to, and I didn't have enough value. These huge companies in this local area, and there's of course the ones out of the city. I had to come up with more people to speak to, and I had to come up with a reason to use me. Well, because I made PlugIntro, now I promote myself, but I offer others the chance to promote themselves. They're interested in taking these video interviews. They're interested in gaining some local exposure. And the move, I think, and the best approach is to offer people the same. The best way to promote your business is to introduce others. And hopefully, through the power of loose connections, Vincent and I know many, many people together, and the law of reciprocity, if I was to promote enough people to my colleague or a client or a contact of mine, they may think of me and when the time comes for someone to buy a house or get a loan. I think that the referrals are important and they're great when they work. However, it's kind of going for the home run, and the regular day-to-day introductions are easy and fun. Plus, you're always in a positive consequence. And I have people to introduce to Vincent. I know plenty of realtors that he might not know. He knows plenty of home inspectors and local business owners that I don't know. We made PlugIntro to meet who you should know, and there really is nothing like it. And the opportunity is there to positively affect. And you hear this phrase all the time, come from a place of contribution. Okay, what do you have to give? In this place, we have a digital position to give. And lastly, people say market to your sphere. And I get in trouble because I ask people the direct question, what do you offer them? And of course, I don't mean a kickback. I mean, what can you do other than great rates, great service, new knowledge, and nuanced application of that knowledge? So we're here. And, Vincent, I know is a pro. I know the company. I know that Vincent will make a positive impact on those agents and their contacts and their referral partners. We're really pleased that Vincent will be a host. He will co-host this platform with our agents. And there's an opportunity to be the exclusive provider of every one of your services along with Vincent. And, Vincent, you want to say how to get in touch with you, or an email or phone number?
Oh, yeah, absolutely. Call or text, weekdays or weekends, 914-494-1459. And my email is VDiMella. So it's my first initial, my last name, at afncorp.com. Stands for American Financial Network. Again, licensed in all 50 states. We do about $14 billion in volume every year. We're the fastest growing mortgage company in America today.
And that's impressive. I know that your needs will be met and all your rights and will be protected. And I'm really happy. I'm proud to have someone of Vincent's caliber. And we look forward to this year-long video interview series. And we're going to bring other people aboard. And we're just beginning, and looking forward to a fantastic rest of 2022.
Excited to be aboard. Thank you so much for the invite, Scott.
Thank you, Vincent. We'll talk more. Take good care.
Take care.
Bye-bye.
Bye-bye.